You, of course, have launched the Franklin Bitcoin ETF today. Remind us of the fees. Remind us of why perhaps you think you're going to survive, at least within the 11 that we have.
Well, I would just point to Bloomberg's own research. People need to go to Bloomberg to see how the fees line up for the issuers. I do think it's correct that you need to look at the longer term about where this goes. This has been a very dynamic issuing environment over the past several days and weeks, and we expect that the dust will settle in the period ahead. But for sure, we believe this is a page that's been turned in this chapter. Accessibility to Bitcoin outside of a digital wallet, inside of some of the more crypto native firms, is what the story is here. It's no secret why we use the ticker symbol EZBC because that's the story of the day.
Roger, the accessibility part is the most interesting to me. Who is taking advantage of this product? Have you specific evidence of whether it's kind of legacy investment managers managing people's 401ks right through to the big institutionals that are active this morning?
Well, I think, again, the story today and volumes that are happening today is something that will change and pivot as we get deeper into 2024, because the idea that there is a trusted brokerage account, I mean, we've had decades and decades of regulatory oversight on the brokerage industry. And as a result of that, the brokerage account has become a trusted infrastructure within the overall capital markets for clients to hold. And so to bring a Bitcoin exposure, which is really a story about the growing and evolving network economy, by and large, whether it's Bitcoin as a single purpose network or whether it's Ethereum and the array of other public blockchain networks that are going to be used as really utilities for this data-driven economy going forward. I think that's a thematic story that's going on. So I think we really want to point toward the longer-term thematic story. But it's this accessibility that opens up not just for individual investors, but for institutions also who are looking for trusted infrastructure and trusted providers to bring these innovations alongside of their other investments.
What's interesting is, of course, in the same breath as signing off on these ETFs, the SEC chair then went on to say that investors should remain cautious about the myriad of risks associated with Bitcoin and products whose value is tied to crypto. Roger, you are someone who's been at the cutting edge of this, trying to involve and build infrastructure over at Franklin Templeton, deciding how to involve digital assets more broadly with real-world assets. What more is needed within the infrastructure space to make it that the SEC chair doesn't think that you should still be very cautious?
Well, I think the SEC chairman is right to talk about caution. I mean, look, those of us who've been managing assets for our clients for dozens of years, there is volatility inside of this. You guys led with that story with the volatility, the daily volatility that happens. We think that's still going to exist in this space. The question is whether you're rewarded for taking that volatility. I think long-term metrics have certainly shown so far that investors are rewarded for taking that volatility and that risk and then putting these alongside other assets for generate best outcomes going forward. But you're correct. We have been working closely with the SEC as it relates to blockchain technologies and using them as infrastructure inside of already traditional assets in order to increase utility for underlying savers. And so we see the caution and we understand it, and we are alongside of that when we're counseling clients for risks in their portfolios in general.
Roger, the halving coming up later in the year is a point of discussion in parallel with this ETF roller coaster. Have you modeled and planned for that, and how will it impact the product in your business?
Past performance is not indicative of future results. However, if you look at previous halving cycles, there it seems to be a technical situation. We all know that Bitcoin is a constrained asset. There's only a certain amount of supply. When that supply begins to be diminished, especially alongside this environment of increased accessibility, it might create interesting technical dynamics flowing either way. But I think as you're seeing the market, as you've already been pointing out, is pivoting toward what are other public blockchain network infrastructure opportunities that investors may be able to tap. And so you've seen that price action diverge a little bit between Ethereum and Bitcoin in the previous days.